All right, we are live. So welcome back to Dapp University. So today we're going to talk about a lot in this live stream, but the first thing I want to jump into is what I'm sure is on everybody's mind when they were, checking their phones last night before bed, this morning before they got started, is like what's going on with the crypto markets? Why do things look like they are melting down? Okay, so I'm going to tell you a bunch of big factors onto why I think this is happening. And I'm sure a lot of other people would agree with me, and what I think is going to happen next. All right, so before we get into that, if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. We're going to talk about that. We're going to look a lot at the news updates that have happened since our live stream yesterday. Again, we do these live streams Monday through Friday on this channel. Just turn on notifications, subscribe. You'll find out about those whenever we go live. We're going to answer some of your questions, like I was saying, and a lot more. So, let's jump in here. We got people jumping in the chat. Automatic Beats, David Stone, Code Chap, Dalai Lama's, West is Best, Daryl, Lee, Keshav, Robert, Cryptechnology, Alwar, welcome. So somebody's saying when moon. That is quite literally the $1 million question for some. So, all right, let's jump into this. So crypto, right? It's looking ugly out there. Let's talk about why this is happening. Okay, so Bitcoin price has fallen down to around $3,200. Ethereum down to Bitcoin $3,200. Ether was close to $3,200 on the exchange. Bitcoin down to about $4,200 across many exchanges. So what is the big factors in this? So I'll pull up a couple of news articles here to support this. I mean, I'm seeing this all over the place, so this is not necessarily where I'm getting this information from. I think this is just a pretty good summary. Says it in better words than I could. So we did have a meeting yesterday where we released the Fed minutes that were penned last month to talk about the outlook for what they plan on doing in the future. Okay, so the Central Bank of the United States has a pretty large role in the what the markets think about what's going to happen in the future. Okay, and I think what we saw yesterday was a pretty big response to what many people interpreted as negative news by the Fed. Okay, and we see the market reacting to that. So when we've seen that across multiple markets, not just crypto. Okay, we see it across stock market as well. All right, you can see. Let me just pull up my screen here. Stocks have also taken a tumble as well. Okay, so everybody, pretty much everybody who's got skin in the game in some way or another, did not interpret the news yesterday as favorable. So let's kind of take a look at that. But another big factor on crypto is we saw a ton of liquidations. Okay, so Bitcoin falls below $43,000, leads to $800 million in crypto liquidations. So this is another thing you have to understand about crypto. Is one of the reasons it's very volatile is because you have a lot of people who are using leverage, okay, in crypto. So basically, they are using money that they don't have to trade. The leverage in crypto works a little bit different than it does in other places. But the whole idea is you collateralize crypto whenever you do that. And people are using excessive leverage, 10, 20, 100x leverage. I mean, it's the advertised numbers. But basically, it's really easy for your position to get just completely liquidated or just lost entirely if the price moves by even a small amount to the downside. And so we saw massive liquidations across a lot of different crypto markets. And that tends to have cascading effects, and that's one of the reasons we can see this volatility and these sharp price corrections, okay? So basically, you got a bunch of people who are levered up, you get some bad news, and it just pops like a bubble, and we see this type of thing ensue, all right? So let's look at a couple of sort of takes on this. So this is a couple of comments from Mike Novogratz, CEO Galaxy Digital. So I'm not nervous in the medium term, but we're going to have a lot of volatility, says crypto bull Novogratz as Bitcoin adds to Fed-fueled tumble. Okay, so let's look at a couple highlights from this. So basically, Novogratz is saying he wasn't rattled by the recent move lower in the crypto complex. So I'm nervous. So I'm not nervous in the medium term, but we're going to have a lot of volatility in the next few weeks, just like I was saying. He said the institutions continue to be bullish on crypto and said that he is expecting more traditional companies to make their foray into the nascent industry by putting some of their portion of their balance sheets into crypto. So I've seen lots of different people talking about this who I would consider more, insiders, okay? I think there's something to this because a lot of these people are going to have information that we don't really have access to, especially when we're talking about what institutions plan on doing, okay? And I don't think they're all just like, trying to shill crypto and say that and sort of like back away. I think that they really do honestly have an inside track on that type of thing. I mean, if you think about it, your incentive would be to be right on that type of thing because you could front run that opportunity, right? Some might be some issues there, but that's what I think is. I think that there is a lot to this, right? We talk about institutional adoption of cryptocurrency being a big thing. It can really move the needle quickly on crypto. We'll talk about that more here in a minute, but let's continue going on. So he says he estimates that you can see a bottom Bitcoin around 38,000 to 40,000. Okay. So he also says that Bitcoin added to a long-term trend lower. Basically, we've seen this dip, but he's talking about the Fed minutes here. Basically, the Federal Reserve indicated that inflation readings and tight labor conditions could warrant interest rate increase, okay, sooner or faster pace than the participants had earlier anticipated. So basically, they're thinking that Fed could raise rates, tighten the conditions for the monetary policy more quickly than the market was anticipating. So these minutes are, a half a month old, so we could have seen some of this stuff kind of change in response already. But the Fed may start to shrink its $8.8 trillion balance sheet relatively soon, all right? So the Fed has been very expansionary, basically increasing its balance sheet, and we've seen assets rise pretty significantly. But I think we have fears of inflation as a factor, as a consequence of this. And I think that's we're going to start tapering soon. And this could start as soon as March. So we also saying this slump is a pullback, so that crypto's recent uptrend is too much of a movement to derail the longer bullish term outlook that many fans envision for assets underpinned by distributed ledger technology. So let's kind of take a look at the charts and see where what I think could potentially happen. Again, I'm not a big technical analyst. I'm not some crazy cryptocurrency price oracle who knows what's going to happen in the short term. But I've been in these markets for a long time, and I like to think about these things in terms of probability. Okay, so if we look, I'm going to look more like the Ether chart. All right, that's what I tend to track more. I know the Bitcoin's a pretty big factor in all this, but let's look at the Ether chart. So basically, let me just pull this up here. First thing is, there's no reason for me to think that this is like game over for crypto, that now we're just going to be to some crazy long bear market or something like that. All right. I think, he said a couple of good things here, which is, crypto's recent uptrend is too much of a movement to derail a long-term bullish outlook that many fans envision. All right. If you go back to my thesis, which I repeat over and over and over again, this channel list does not change, which is basically we're creating technology that has real use cases and real benefits. And insofar as cryptocurrency is integrated in that technology and people need it, then that generates demand for the cryptocurrency, which can cause the price to increase over time. Now, in the short term, it can be a bit of a random walk. Okay, we can see these liquidation events, these big, scary price corrections like the one we're in right now. I've been a part of so many of these. We saw one back in May, and if you were here, this was not a fun time to be in crypto, right? Because back then, the technicals looked like a parabolic blow off top, and that you'd enter into some sort of really long bear market. But I was even saying back then that I didn't think it was game over. And it turned out not to be. So we were right about that. And so what in terms of probability, what do I think could happen? So, he's talking about seeing significant support in the Bitcoin price from maybe $38,000 to $40,000. Okay. If I were looking at this in ETH terms, like I was saying, which I tend to track more. Okay. Let's just think about it in terms of probability. Back when we were about $4,000 and we saw this, last kind of liquidation event that kind of shocked people. This was in the middle of December. I was thinking that whenever that happened, that we could see some chop, kind of like we're seeing now. And if we were going to the downside, because I actually did another buy back in that price range. And like I said, I don't always know what the short-term price is going to do. So whenever I make decisions, I'm not giving you financial advice. I'm just telling you what I do. I think about it in terms of probability. So about that $4,000 price level, I was thinking, there's, in my mind, a worst-case scenario, barring some black swan event, that you'd see about a 50% downside because, worst case scenarios from $4,000 would drop by about 50%, which would be down in this $2,000 range. I mean, we saw significant support around this price level after we had this huge correction back here. Okay. So similarly, that would be a worst case scenario. Now the next case scenario would be, some support kind of in this price range around the $3,000 level, because we saw another correction after a rejection at $4,000 down here at about, $3,000, and we're approaching that level now. In my opinion, the fair market value of Ether has increased since these last periods. Okay. And so the more likely thing is we would get some support before we reach this. And now there's statistical variance, right? You could get to this point, maybe get a little bit lower than that, and people think it's game over. But the whole point is people see demand for the assets when they start to reach these price levels, and that tends to make the price go up, okay? There's going to be people who see, hey, this is on a discount, I want to get in, because trust me, I wish I'd waited, not bought it, $3,800, $3,700, right? And now I could buy it again at $3,000. But nobody knows the future. Nobody's what's going to happen. So you have to make bets based on your best guess. And you do the best tool that you can use when you're guessing is fundamental analysis and thesis, and then probability about prices in the short to mid to long term. Okay. So that's kind of what I think is happening. I mean, I don't think there's no reason to think that our long-term outlook has really changed for a couple reasons. One, like I was saying before, there's the demand for this tech is continuing to go like crazy. We're innovating this space like crazy. That's only going to generate stronger network effects for these blockchain networks for major quality cryptos. Okay, and then number two, the reason I'm still long-term super bullish is we haven't had any kind of massive parabolic rally. Okay. Because if we had some sort of massive parabolic rally, that would make it even harder to support the price and keep going up, from here. So now the caveats with this are, I talked about, likelihood, worst case scenarios, all that type of stuff. About 50% downside from $4,000, which is about $2,000 being in my mind, or not financial advice, but in my mind, a worst case scenario. There can be a worst case scenario beyond that, which what I would consider more of like either something that you can't foresee that could, invalidate crypto's existence. Everything technically can go to zero, but it's so unlikely that it's not even really worth considering in many cases. Now, of course, you need to be able to protect your crypto, all that type of stuff. But in terms of the crypto markets themselves, that is always a systemic risk on the table, but it's always so small that it's not even really worth considering that much. Now, in terms of the economy, I don't pretend to be a macro economist, right? But if we take, the words of others, I think the most likely scenario is if we see, continued comments from the central banks about tightening monetary policy, all that type of stuff, we could see some, volatility and chop. And most likely for crypto, what that would mean is probably just some sideways action, right? But I think long term, there's no reason for me to think that we're not, long-term bullish. So my guy drinks water out of a sippy cup with a straw. It's actually called a blender bottle. This is usually what athletes drink things out of. And yeah, that's a straw. It's just a pink straw. It's a milkshake straw, actually. Makes it a lot easier to drink a lot of water quickly. Okay, so so say they like the blockchain dev video. Yeah, definitely check that out. I'm actually going to go ahead and pin it to my YouTube homepage after this. So I just released updated guide for 2022 on how to become a blockchain developer. Answer some of your frequently asked questions like how do I do this step by step? What programming languages should I learn? Lots of other FAQs like how long does it take? Should I learn blockchain first? What language should I learn first? All that type of stuff. Step-by-step actionable plan to accomplish your goals, whether it's to get a job, build your own project, become a freelancer, build a bot, whatever it is. That's out. You can look at my last video I just released. I'm going to pin it to my YouTube homepage for easy access. Someone says, want to thank for the Blockchain Bootcamp. Helped the first becoming blockchain dev 6 months ago. Worked with 3 successful NFT projects, including one with WorldStar. All paid. Awesome. Congratulations. That's from Christian there in the chat. So Christian, if you have a testimonial that you want to share with the community, you can email me. My email address is down below, and we'd love to hear from you. So is there any L2 guides in the works? So we have done some videos on L2s. Let's actually go ahead and check on this because we can see what the status of the L2 adoption is. So this is L2beat.com. So what am I checking on here? So basically this is the statistics of adoption of layer 2 scaling solutions on top of Ethereum. So basically, one of the most common complaints for the Ethereum ecosystem is the gas fees are too high, that Ethereum's too slow, it's too expensive to use, and they think it'd wait for Ethereum 2.0 to come out in order to fix that. So that is not entirely true. Well, it is true that the gas fees on ETH are too high for most people, for most use cases. They need to be fixed in order to achieve mass adoption. That is totally true. So you're correct with that assumption. The wrong assumption is that you have to wait for Ethereum 2.0 to fix that because it's not going to fix it, okay, in and of itself. That's what we need layer 2 scaling solutions for. This is a second environment where you can offload transactions and then settle those transactions back on the Ethereum main chain. And you can see the activity for all the layer 2s out there. We've had lots of layer 2s hit the scene. Arbitrum, Optimism, ZK Sync, others, right? And adoption for L2s is taking off. Now you see this dip right here. Okay, you might say that's not adoption. Like that's decline. Well, this is the TVL metric. So this is for total value locked. And this is going to track pretty close. Like the cryptocurrency prices have a huge impact on this. So TVL is not a perfect metric by any stretch of the imagination, but it's something. Okay, but you can also compare this like to other crypto charts. Okay, so if you look at L2Beat and you compare on the 90-day time range, and then you go to like CoinGecko and you look at like the Ether price, for example, across a 90-day time range, you can sort of overlay those mentally and see how it looks. So, you know, you can see this peak of the Ether price back at November 9th. This is also November 25th. Okay. So this is actually pretty bullish because here was the last, you know, Ether price peak. And if it were perfectly tracking with the Ether price, like you would just see, you know, basically a decline. But you actually see an uptrend. All right. And then even as it's falling, like it's not falling anywhere near as fast. And then you're seeing it actually increase here. So that's still adoption like we're talking about here. A lot of these layer 2s actually need, you know, Ether to pay gas fees on these networks too. So that's network effect, and that's demand for Ether, the asset itself. So, you know, you've seen maybe some of the gas fees on Ethereum even go down some. That layer 2s, in my opinion, are a big factor on that, or a factor on that. Okay, you've seen maybe some of the Ethereum daily transactions somewhat flatten over the past, you know, 6 months or so. I I think layer 2s are a part of that. I think also just waning interest after you see a big bubble like that, sort of hype cycle pop is also a factor. People getting priced out of ETH with transactions moving to other blockchains is also a factor. There's lots of factors why I'd say that would cool off. But we're making up for a lot of activity with layer 2s starting to gain some traction here. Somebody says ETH is a prototype, Lubin's words of Flintstone car, so to speak. So Ethereum 1.0 definitely is a something that's supposed to be a 1.0 version. To get it out there, get it working. ETH 2.0 is the final long-term vision of Ethereum. Now, it's going to take some time for the actual finished product of ETH2 to be here, but we can get enormous benefits out of ETH in the next several months with layer 2 scaling solutions continuing to become adopted, and then also the merge happening this year. So the difficulty bomb has been pushed back into June. Okay, so the merge should happen before then, assuming that it doesn't get pushed back again, which if I were a betting man, I would say it's not going to. So if I had to guess, I'd say maybe early Q2, maybe mid Q2, because I don't, you don't want to do the merge like a week before the bomb goes off. So maybe like April, May, we'll see. How can we determine if a DeFi project is safe to invest in? Well, you can never really know for sure. But one thing that will give you a pretty big leg up on this is actually learning to read code and learn to read smart contracts. And the best way to learn to read code is to write code. So learning to, basically follow the tutorials on my channel into the blockchain bootcamp, learning how to write smart contracts will definitely help you think about what could go wrong with a project. Somebody says Ethereum might overtake Bitcoin this year. Might. Why all predictions failed so far? Yeah, I mean, nobody knows for sure what's going to happen in the future. I don't ever really try to call like specific price targets with specific dates. I do think that Bitcoin can reach $100,000 relatively soon on the grand scheme of things, a lot faster than many other assets could double in price. I do think that Ether can reach $10,000 a lot faster than many other assets can roughly triple in price. And that's what I make my bet on. We've seen a lot of price targets of, $10,000 per Ether, $20,000 per Ether, like the person in the chat's mentioning, by specific dates, and a lot of those have just been wrong. I've analyzed a lot of those on my channel. I have not subscribed to those price targets. Okay, just so everybody's clear on that. Somebody says still waiting on this parabolic face melt they were promised. Yeah, had a lot of people out there promising things that have not happened. Somebody saying some leverage traders got wrecked. Yeah, some leverage traders definitely did get wrecked. I definitely do not recommend that anybody use leverage. And a lot of people are going to do it anyway, but vast majority of people should not be touching leverage. Somebody says their goal is to hold for 8 years and see where it goes. I have a good feeling that you will not regret holding for 8 years. Somebody says they're excited for VR crypto stuff. Well, that right there is the promise of the metaverse. That's for sure. Is it necessary to know data structures and algorithms to become a blockchain developer? So definitely not algorithms. Some data structures are good to know, but only the ones that really apply to blockchain development. So this happens a lot for beginner programmers. They want to go off and study like algorithm puzzles and all this type of stuff. It's not really that useful for like learning functional programming skills. I'm not saying it's never useful, but I'm saying it's going to slow you down when you get started and honestly be counterproductive. It just depends on what your goal is. I mean, if you want to go work at some big company where they put you through these crazy whiteboard challenges that are honestly more about like, are you going to jump through the hoops that we put you through? It's not that these skills are actually that relevant to your job. It's just, are you going to jump when we say jump? That's what a lot of those coding interviews are about. So basically like, you don't really need to know a lot of that stuff just to get started. I'm not saying it's never useful to ever have that information. I'm just saying I would not personally recommend overwhelming yourself with those coding challenges before you can functionally just build an app on your own. Suppose I can melt. Will when the market is down like this, will that affect the ability to do arbitrage? So actually, there are more arbitrage opportunities when volatility is increased like this, because that's when arbitrage opportunities occur. When there are sharp changes in cryptocurrency price, that's when exchanges fall out of sync. Now, in terms of fees, that can affect things because a lot of people are trying to make transactions quickly. That can't do it. All right, everybody, that's all I got for today. So I know it's a rough day out there for crypto land, but again, hang in there. That's personally what I'm doing, is sitting back and doing a lot of nothing. You know, my long-term outlook on this hasn't changed. We've seen some comments about how this could lead to some, volatility in the short term. I can definitely see that. But yeah, that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps these videos out so more people learn about blockchain. And if you're as fast in this technology as I am, you want to get your hands dirty hacking, get started today, you go to my YouTube homepage. You can find my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you want to take a master shortcut entirely, I can show you become a blockchain master step-by-step start to finish over at dappuniversity.com/bootcamp. You don't have to be an expert to get started today. I've helped people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. Until next time, thanks for watching.